Hello there, welcome to Bizworld. Bank Negara Malaysia BNM has cut the overnight policy rate OPR by 25 basis points to 3% at its Monetary Policy Committee MPC meeting earlier today. This was the first adjustment since January 2018. The decision was made amid a weak economic outlook. In a statement, the central bank said the ceiling and floor rates of the corridor for the OPR are correspondingly reduced to 3.25% and 2.75% respectively. While domestic monetary and financial conditions remain supportive of economic growth, BNM said there are some signs of tightening of financial conditioning. The adjustments to the OPR, it said, is intended to preserve the degree of monetary accommodativeness. This is consistent with the central bank's monetary policy stance of supporting a steady growth path amid price stability. The MPC, it said, will continue to monitor and assess the balance of risks surrounding the outlook for domestic growth and inflation. Finance Minister Lim Guan Eng said Malaysia is embracing digital technology, especially 5G, as a launching pad to become a high-income nation. He said Malaysia, however, is aware that technology will pose a risk of digital disruption, causing loss of jobs in traditional sectors, with many of these jobs not replaced by new ones. Therefore, he said, there is a need to create new jobs through income incentives or supplements to replace jobs lost through digital disruption. Lim said this when delivering a keynote address with the theme Unlocking the Potential of Digital Economy at an event during the International Monetary Fund and World Bank Group spring meetings held in Washington, D.C. recently. The finance minister also said he had engaged with international ratings agencies, namely S&P and Fitch and Moody's, to provide an update on Malaysia's current economic and financial developments. The international rating agencies are convinced that Malaysia will achieve its fiscal targets, particularly the 3.4% fiscal deficit to gross domestic product ratio this year, and are comfortable with Malaysia's economic performance to date. Malaysia's trade figures for April are expected to improve despite the worsening global trade tensions, particularly between the US and China. International Trade and Industry Deputy Minister Ong Kian Ming said there was a slight drop overall in Malaysia's import and export performance, but the trade decline in February was much larger than March and may improve in April.
We do take note that the drop on a year-to-year basis in February was actually much larger. So from a year-to-year perspective, the drop in March was less than the drop in February. So that I think perhaps may indicate the trade figures for April may improve. So we wait to see. But I don't think whatever announcements that have been made in terms of the US-China trade tensions would affect trade figures, trade volume in the short term.
He told this to reporters after launching Semicon Southeast Asia 2019 earlier today. Malaysian exports in March 2019 decreased 0.5% to 84 billion ringgit, while the country's trade in February 2019 declined by 7.2% to 122.15 billion ringgit as compared to February 2018. Digi is set to become Malaysia's largest mobile operator following the merger between Axiata Group and Norway's Telenor Group, which holds a 49% stake in Digi.com Berhad. According to Public Investment Bank, via the merger, Digi would potentially improve margins due to cost savings from sharing of resources, network optimization and capex avoidance. Axiata, it said, will be a proxy to the largest telco operator in Asia and become the must-have stock due to its sizable market capitalization. Sealing a partnership with Telenor, the research firm added that the merged entity should be able to reap significant synergies in the future. The merger company, Merged Co, is expected to create the largest telco player in Asia with a revenue of more than 50 billion ringgit and EBITDA of above 20 billion ringgit. Post-merger, Axiata and Telenor would hold 43.5% and 56.5% stake in the merged unit, respectively. And that wraps up Bizworld this time around. I'm Brandon Wong. Thanks for investing your time with us.